Hi everyone, this video belongs to Jagoinvestor Wealth Club and this is the third part of course estate planning. In this video we'll see what are joint accounts and how they are used for passing your wealth to the next generation. In the second video we had seen what is nomination and that was the first one of the tools for wealth passing. Now in this video let's move ahead and understand joint accounts. So what exactly is joint account? Ask yourself, what is your understanding about joint accounts? In simple words, I would say it's a way of giving someone control of an asset before death itself. So within your lifetime itself, you are making sure that someone should be able to control an asset if you're not there tomorrow. Now, what are the assets where you can have joint accounts? I would say almost everything like saving bank account, fixed deposits, mutual funds, Damat account, post office products, NSC, real estate in case of under construction house. So you can have joint accounts almost in all the products. Now what exactly is joint account? Let us try to understand through an example. Let us say there are two guys and first one is the primary holder and the second one is secondary holder, and what you want is that both of them should have equal rights. Both of them should be able to do all the things which can be done with an asset, like withdrawing the money or depositing the money or closing the account, etc., etc. Now if you want that both of these people should be able to perform the task independently, in that case you open a joint account and the mode is either or survivor. Here we are talking about specifically saving bank account, because that is one thing where we generally use joint account term. So in this case, either or survivor mode, both of the persons should be able to take any decision independently. So primary can do whatever he wants and even secondary can do it. However, if you want that only the first person should be able to perform all the tasks but not the second person initially, and only after the death of the primary the secondary person should be able to get hold of it. In that case the mode is former or survivor. If you read these words, former or survivor, what it means is either the former should be able to take all the decision, all the control, or the survivor. So in this case automatically the primary person is the former one. If he is not there, only then the survivor will be able to take control of the saving bank account and perform all the tasks. So I hope this simple example has given you very good clarity. Now concentrate on the second one, which is former or survivor. Here you can see that by the structure itself, a primary person can give control to the secondary person upon his death. So he can make sure that if he is not there, the second person should be able to take all the decisions. Now if you have a saving bank account or a fixed deposit and you wanted that either you should be able to control it, or if you are not there then some other party should be able to control it, then what you should do is make it as a joint account and you should be the primary person and the other person should be secondary, and the mode of operation should be former or survivor. In that case, in your lifetime only you will be able to do everything, but if you're not there then the other person gets the control of it. Now let us see some assets, let us see some asset classes and see how it functions there. So in case of saving bank or fixed deposit, survivor has to produce death certificate to get control of the saving bank account, and the survivor gets 100% of the balance. In case of fixed deposit, everything is same, just that fixed deposit will be handed over only on maturity. The joint holder cannot break it in between in case of death of the primary person. In case of post office saving bank and post office deposits, on the death of the depositor, the other person who is the joint holder should be able to get control of the saving bank account or the fixed deposit, just as if he had opened it on his name. So it's very much same in bank and post office. In case of mutual fund, if there are joint holders, then in case the primary person dies, the joint holder will have to provide these documents. The first one is death certificate, The second one is bank account details of himself. And then the third one will be proper KYC of surviving unit holder. And if these three things are provided, then the units are transferred on his name. In case of Damat account, there can be maximum 3 account holders. There is one main holder and 2 are joint holders. And if one of the joint holder expires, the new Damat account is opened in the name of surviving joint holders, and all the securities are transferred from the previous account to the new account. So what do you learn from this? If you understand joint accounts, you can see that there are some processes to be followed if the primary holder dies. And in that case, make sure that the withdrawals are made easy. So one thing I would say is enable net banking and make sure your family members know the password and how to operate it, so that in case you are not there, they don't have to go through the usual process of claiming the account or claiming the mutual fund units or claiming the Damat account and fill forms and produce death certificate. What they can do is just do the transaction overnight, because all they have to use is password and the ID, and they can just redeem the funds. They can transfer the cash from one bank account to other account. It becomes so easy. And the other thing I would say is share the debit card passwords with them, so that if debit card is there, they can just go and just take out the money. That's all. So I would say make withdrawal process very easy for your family members. That's all. So this was understanding joint bank accounts, and this was a small module because there is not much into it, but this is a very powerful tool, I would say. So that is all. Thanks a lot. Let's see you in 4th module now, which will be on wills.